Hi, this is Lee Phillips. I want to talk to you for a couple of seconds about an issue that comes up in your corporations or your LLCs. And the question is, have you documented all of the transactions that have taken place between you and the company, and are those straight? Now this is kind of similar to commingling, no question about that. The way you get around commingling in some cases is you actually have the company document that they dealt with you in this manner. For example, I was at the, I got a car fixed the other day, and I didn't have a check. I had a business check and not a personal check. I don't have a checking account. My wife has the checking account, and if I'm a good boy, she'll give me a check sometimes. But at any rate, I had the business check, and I thought, well, should I pay the car repairs with this business check, and then I could either take that as a distribution from my company, or I could reimburse the company through Christie's check. And I thought about it for a minute, and finally I said, I can't give you any money today. Let me go get a check and I will give it to you. So I actually went and had Christie make out the check for me for the amount of the repairs. Well, why didn't I just take it as a distribution? If the IRS and people see these nickel and dime, $400, $500, $1,000, whatever, coming in irregularly as distributions, they're going to look at it and they're going to say commingling. And it goes to the element of, is this company really independent of me, or is it my alter ego? And that's the whole issue when you're sued and when somebody's coming after you and wants to pierce the corporate veil. So it's not a good idea to write company checks or company credit cards or whatever and then have that count as a distribution to you at the end of the year. If you're going to do it, reimburse the company at a minimum. Don't do it though. Not a good idea. The company on distribution to you should actually have an entry in the minutes that say distribution is going to be made to the owners of X number of dollars or whatever it is. So you need to document it in your minutes, and remember, in the minutes you're just going to keep a Word document in your computer, and then whenever something happens that requires a minute entry, you just make a little entry, and then when you have your annual meeting or your quarterly meeting or whatever it is, you just print that out and have everybody sign it as a resolution. But don't commingle, don't try and then go back and pass resolutions for it. Just keep the money separately. When you do make a distribution at the end of the year, and for tax purposes that's a good idea, pay yourself the reasonable salary and then make the distribution of the rest of the profit in your company. But that requires a resolution in the minutes. So make sure that you do that sort of thing. Read the articles of the operating agreement or the bylaws in your company and see what requires a resolution from the officers and directors or the managers of the company. And then anything that does, make sure that you get that in there, and make sure that you don't just willy-nilly go back and forth between yourself and the company. You've got to keep them separate, or they're going to call it your alter ego, and that means you lose the corporate veil whenever the lawsuit comes. So let's keep it up to date. Let's protect you from an asset protection standpoint. And yeah, you can keep all of the rules. It's not that hard. I'm going to help you do it. This is Lee Phillips. I've talked about commingling and the resolutions that need to be required when the company has some dealings with you.